Hello, welcome and good evening. My name is Christina, and on behalf of the Los Angeles Public Library, welcome again and thank you for joining us this evening. This evening, we'll be having a financial workshop, Investor Protection, and we will have financial education workshops every day this week, Monday through Friday at 6 p.m. The workshops are streamed live right back here on LAPL YouTube or Facebook page. Also, you can sign up for a free private telephone consultation on Saturday, October 24th, with a certified financial planner to discuss your personal finance questions. This is a pro bono service offered by the Financial Planning Association of Los Angeles, and consultations are completely free with no strings attached. To learn more about the upcoming workshops and to sign up for a free appointment, visit lapl.org/financial planning. And just a few more last housekeeping items before we begin. Feel free to ask questions during the presentation, but there will be an official Q&A at the end. Also, this is a publicly viewable streaming program, so when you're chatting in the chat box or asking your questions, just make sure you do not disclose any private information. And if you have any specific questions, consider signing up for those one-on-ones on Saturday. Now, without further ado, I will hand it off to Carol Lally, who is our speaker for today. She is from the Los Angeles Regional Office of the Securities and Exchange Commission. So thank you, Carol, for being here, and I guess take it away.
Thank you, Christina. Thank you for the nice introduction, and thank you to the Los Angeles Public Library for inviting me here today. I am from the Los Angeles Regional Office of the United States Securities and Exchange Commission, which coincidentally is right across the street, actually, from the main downtown Los Angeles Public Library. Before I get started, we're going to talk today about protecting yourself from investment scams. Before I get started, let me just tell you a little bit about myself. I am an attorney. I've worked at the SEC for about 19 years. I've spent about half of that time in the Division of Enforcement, which is the part of the SEC that investigates and prosecutes securities fraud, and about half of that time in my current position, which is the supervisor of the group that conducts outreach, such as we're doing here today, and that also takes in the tips and complaints and referrals from the public and other agencies about potential violations of the federal securities laws or just general questions. So if you've got a tip that you want to share with the SEC, or you have an investing question that you want to ask the SEC, I will give you contact information throughout the presentation and then at the end of the presentation, but more than likely it would end up being someone in my staff who might work on those matters, which we take very seriously. The Los Angeles Office of the Securities and Exchange Commission is responsible for Southern California, Hawaii and the Pacific Islands, Arizona and Nevada. So it's quite a large area that we cover. So let me get started on my PowerPoint presentation. As I say, we're going to talk about protecting yourself from investment scams. Before I dive into the presentation, I do have to give a standard disclaimer that the SEC's Office of Investor Education and Advocacy is providing this information as a service to investors, and it's not an official statement of the SEC. I cannot give today or at any point legal or business advice. So unfortunately, if you have specific legal or business questions, that's not the kind of information that I can give today, but hopefully the information that I can provide you will find helpful. What we're going to talk about and the information that I'm going to share will give you a general overview of the SEC and what the SEC does. I'm going to highlight for you some red flags of fraud so that you'll be able to spot fraudulent offers or fraudsters when they approach you. Going to give you some information on some common types of scams that fraudsters often use, so you'll know what to look for there. And then finally, hopefully the information that I share will empower you so that you will be able to take steps to avoid fraud and protect yourself. That's what we're going to cover today, and let's start with just a quick overview of the Securities and Exchange Commission and what the mission of the SEC is. The SEC has a three-part mission to, as you can see on the screen, protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. So what I'm doing here today is part of that mission to help protect investors by educating investors and providing them with resources so that they can help themselves, As I say, the Los Angeles Regional Office covers a pretty wide area of the nation, and we go when we're not in a pandemic. I travel all across that region giving presentations in person like I'm doing here today. But now that we're all social distancing and remote working, I'm providing a lot of these same outreach opportunities via the internet. And if you have an organization that you are affiliated with that you think would benefit from investor outreach, we go to military bases typically go to classrooms and speak to teachers. So these are just some of the kinds of communities that we reach out to on a regular basis. We're a relatively small agency, but we oversee a pretty big market, as you can see on the slide in front of you. Quite a number of market participants in the U.S. securities market, including investment advisors and broker-dealers, reporting companies. So really quite a large market for the size of the agency. The SEC is comprised of headquarters and then 11 regional offices. And as I mentioned, we are a civil regulatory agency. So that means that we can investigate and prosecute potential violations of the federal securities law in administrative forums and in federal court. We are not a criminal agency. Very frequently, I get asked, why haven't you put such and such person in jail? Certainly, there are plenty of people that I would like to have the power to put in jail, but the SEC is not a criminal agency. We do work fairly frequently with criminal authorities such as the FBI and other federal criminal agencies, but we don't have criminal power ourselves. We do have pretty strong remedies where we can seize assets. We can go in and get repatriation orders from funds that have gone overseas. And so pretty powerful collection of civil remedies that we can use in parallel with the criminal authorities when we bring investigations and prosecutions. In addition to generally the responsibilities of overseeing the markets, as I say, we do have the responsibility to enforce the federal securities laws. We also examine market participants, broker-dealers, and investment advisors, and we review the disclosures of approximately 8,000 reporting companies, which would be publicly traded companies from big names that you're probably familiar with, like Apple, to smaller size companies. Just to give you a sense of how effective the Securities and Exchange Commission is, in the most recent year for which I have data, as you can see on the slide, for fiscal year 2018, we collected almost $8 billion from more than 800 enforcement actions. So pretty substantial amount of funds. And whenever possible, our goal is to get those funds back in the hands of harmed investors. So for example, if we were to bring an enforcement action involving a potential Ponzi scheme, what we would most likely seek to do would be to go in, seize control of the entity, seize control of all the assets of the Ponzi scheme, get a receiver put in place over the entity, do a financial accounting, and then through a fair fund distribution, try to get the funds back to the harmed investors. The Office of Investor Education and Advocacy is the part of the SEC that conducts outreach such as we're doing here today and responds to general inquiries from investors. As you can see, that office responds to quite a significant number of inquiries from the public, more than 17,000. I think that's fiscal year 2018. Almost everything that I talk about today is actually going to come from our website, investor.gov. Maybe not exactly in the form that you'll see it, but the underlying information is available to you free as a member of the public on investor.gov. And it's really a pretty extensive and impressive, I would say, website. One of, in my opinion, one of the easier to access and use federal government agency websites. This is what the landing page looks like on the screen, investor.gov. And as you can see right away, there are a number of highlighted drop-down areas at the top of the screen that would be at the top of your landing page, such as how to protect your investments. You can see that highlighted there with the red arrow, but also basic information about introduction to investing. If you're new to investing, some financial tools and calculators that can be really helpful, that can help you calculate the amount of money that you need to save on a regular basis to meet a potential savings or investing goal, and all kinds of additional resources If you go into these drop-down menus, you'll see there are some resources that are specifically targeted for particular groups. So if you are a teacher and you're looking for classroom materials that might be helpful either in person or online, we have some materials specifically for teachers, some materials for students, for seniors, for military personnel. So really, I encourage you to poke around this website after this presentation is done, and I think you will find a lot of helpful information. I want you to note too the middle of this landing page where it says check out your investment professional. We'll be coming back to that search tool and talking about that later in the presentation. So just keep that in mind. That's right there in the middle of the landing page of investor.gov. So it's very easy to find and something that I think you'll find helpful as you begin your own investing journey. Why are we here today talking about investing wisely and financial fraud? Well, one of the reasons we're here, I'm sorry to say, is that financial fraud is really quite prevalent. As you can see on the slide, more than 8 in 10 respondents to a survey by Finra Foundation had been solicited for potentially fraudulent offers. And unfortunately, I think roughly 16% of those actually did invest in one of the fraudulent offers, and of that, about 11% lost a significant amount of money. So unfortunately, financial fraud is quite prevalent. And in the most recent year for which we have data, $50 billion was lost to fraud. So unfortunately, as I say, financial fraud really is a problem, and that's why it behooves all of us to learn to spot the red flags of fraud and learn how to protect ourselves. So that's what we're going to jump into next. What are the red flags of fraud? And some of this, I think, sounds common sense and really in some ways is, but can be very difficult to internalize. The first thing we always tell people, and you've probably heard this in connection with a lot of different things in your life, if it sounds too good to be true, it probably is. Probably the majority of the cases that I investigated when I was working on the enforcement side involved some kind of offering fraud or investment scheme where just the scheme itself was fraudulent and the returns were so enticing to people for the potential returns that they set aside what was probably their ordinary sense of what would be a good investment. One thing that's important to realize is that potential for return correlates to risk. So an investment that is less risky should offer, if it's working the way an investment legitimately works, should offer a lower return. In exchange for taking on more risk, you then get a higher potential for return. But the key word is, of course, potential, because all investments have risks and all investments can be lost. So once you see the potential reward go up, the potential return go up to 5, 6, 7%, that means you're taking on more risk than an investment you might make that has a potential return of 2 to 4%. And sometimes I think even people who know this basic corollary rule of investing forget that when they are approached to invest in something that offers a return that sounds like it can beat the market 10, 11, 12, 15%, who wouldn't want to make those kinds of returns? But understand that just by their nature, that means they're very, very risky. So if somebody tells you that there's an investment with those kinds of beat the market returns, but that it's safe or guaranteed or there's no risk, that's a huge red flag, because that's not how investments work. Risk and potential return are correlated. Any kind of pressure to buy right now is a big red flag. And if there's no documentation, such as an underlying prospectus, or sometimes what's called a placement memorandum or subscription agreement, that is a big red flag as well. A significant number of securities fraud schemes involve investments that don't have any documentation or that have very little documentation. And in particular, you will see, as we talk about a little later in the presentation, most legitimate investments do have some kind of registration related to them, or if not a registration, then a filing that explains why they don't need to be registered. So the lack of registration or some kind of way to see the documentation of the investment is a big red flag as well. And then likewise, people who offer and sell securities or provide investment advice for compensation, there are very few reasons why that person shouldn't be licensed or registered. So if you're dealing with somebody who's trying to sell you something and they are not licensed or registered, and the investment product they're trying to sell you is not registered, those are big red flags, and you should proceed very cautiously. Unsolicited offers are also a big red flag. The best investment is the investment that you choose to pursue, where you've done your research and you are the one who initiates the contact. And as you probably know, today people can approach you to buy something through all different sorts of means, whether it's cold calls or regular old-fashioned mail to something you might get from an unsolicited email or something that you'll get on social media. Fraudsters use all of these meetings to try to reach out to people. One thing we see in particular in the securities arena is the free dinner seminar. Come to this country club or this location. I'm going to provide some free investing advice. You don't have to pay for it at all. In fact, I'm going to give you this free dinner and there's no obligation whatsoever. Unfortunately, a lot of times that sort of setup is a bait and switch where people get you there, they've enticed you with this promise of a free dinner. They've done something that seems nice to you, and so then you maybe feel more predisposed to do something nice in return by potentially following their investing advice or investing in an investment product that they're offering at their free seminar dinner, because that's how nice people are. They want to reciprocate something nice that's been done for them. But what you're giving back to that person is, of course, something much larger than a free dinner if you're turning over some portion of your investing funds to that person. So this is something to be very cautious about, these free dinner seminars. The best investment, as I said, is the one that you identify. So if you get an unsolicited offer, strongly consider ignoring and not responding to that offer. But if you do respond, make sure that you are doing your own research and not just relying on the representations of the person trying to sell you something. My experience is that fraudsters are extremely charming people. Every fraudster I've ever met and taken testimony from or prosecuted in court has been someone who has really strong social skills, somebody you want to hang out and have a beer with, somebody you wouldn't mind leaving your children in their charge to babysit. They just have that way about them, but they will take advantage of that charm and your response to that charm to separate you from your money if they can. Very often they will dangle this prospect of false wealth, these high returns that you can't get elsewhere. Sometimes they will claim to have some kind of credentials that make them an expert. I investigated a fraud shortly after the recession when everybody was very nervous about the stock market, and the person running this fraud claimed to have sort of special ability to seek out alternative investments that were protected from stock market ups and downs, that benefited whether the stock market went up or went down, and that he had this special way of analyzing the market. He didn't have any of these things. He didn't have any kind of special training. He didn't know the secret sauce that none of the rest of us know, but he used this kind of credibility to source credibility that he claimed to have to build trust with his victims, basically. Scarcity, creating a false sense of urgency, telling you need to invest now. Reciprocity, offering to do that small favor, like the free lunch seminar that I talked about. And then social consensus is a very common one, leading you to believe that smart people or people that you know or trust have already invested in this investment product. These are some of the very common tactics of fraudsters. So be wary of them. What are the scams that we see fraudsters frequently using that you or I might be targeted to invest in? One extremely common kind of scam that we see quite frequently generally, but I would say particularly frequently in the part of the country that we live in, unfortunately, is called a pump and dump. And this involves the hyping of a stock through false or misleading statements. Lots of times these are small companies, what are called penny stocks or microcap stocks that are traded not on the New York Stock Exchange or a NASDAQ, but are quoted over the counter. So I don't know if any of you guys saw the Wolf of Wall Street movie or Boiler Room, which is another movie that's very similar type of scheme. The schemes described in these movies are pump and dump schemes where fraudsters get control of a small penny stock company, and then they are able to manipulate the trading in the shares, or at least they try to manipulate the trading in the shares of that company to their own benefit. So I investigated, for example, a pump and dump scheme where bad guys had gotten control of one of these small companies. They had issued a bunch of shares to themselves, unbeknownst to the public, and these shares were supposed to be restricted where you weren't able to trade them for a certain period of time. But they improperly had the restrictive legends removed from those shares. And then they began issuing a bunch of false press releases. Oh, this company has created this great product, and we entered into a multi-million-dollar contract to sell this product. And so the price of the stock started to go up. And even though the stock was pretty cheap, trading for less than $1, just those small increments could mean a huge potential profit for people because the percentage increase was so large. And the market got excited. You started to see more and more people buying. The price is going up. But what the public doesn't know is that the insiders who have gotten control of so many shares for $0 a share are the ones selling the shares into the market. So you and I, as we're buying these shares at 50 cents a share, let's say, the insiders are selling them to us, and they're getting that 50 cents a share, which if they got them for $0 is a pretty big profit, which they did. And this is a pretty common scheme. So if you want to invest, and then what happened in that particular case and what happens kind of inevitably is people start figuring out there's no there, that the company doesn't really have the product or whatever it is that it's touting. And so then the price of the market goes down, and the insiders have dumped all their shares and taken their profits, and the people left holding the bag and the shares are you and me. So if you want to invest in this area of the market, just be very cautious. There are, of course, legitimate small companies, but very often these involve companies with no real track record or product, and they're quite risky, just by nature, even if there's not fraud involved. So be very cautious in this area. Ponzi schemes, I think, thanks to some of the high publicity that some Ponzi schemes get, most people are familiar with at least the idea of a Ponzi scheme, where money comes in from new investors, and those new investor funds are used to pay old investors, pre-existing investors, what they think are returns. But actually, there are no real returns. There's no real profit generating enterprise. There's just money coming in from investors being used to pay other investors. Very often, these promise very high returns with little to no risk. As you remember, I mentioned earlier, that should be a red flag right there. Or the returns are overly consistent. Every year they're making 8, 9, 10% over and over and over again every single solitary year and quarter. Whereas most legitimate investments, you do see some up and down movement. The strategies that they describe to make profits for their business may be very secretive and complex. And often when I speak to the victims of this kind of fraud, they say, I just figured that it was a very sophisticated business model and I didn't understand it. What they realize, unfortunately, is that they didn't understand it because it wasn't understandable. There's nothing to understand. There's no real business at the heart of it. People are using this really complex language in part to sort of confuse people and disguise the fact that there's nothing underlying the investment. Again, this is an area where you very often will see the investments themselves are not registered with the SEC. The people who are selling them are not registered as they should be, and there may not be a lot of documentation or any kind of real investing document. So these are big red flags that you would want to be on the lookout for, really the red flags of a Ponzi scheme. Pyramid schemes are very similar sort of scheme, but in this kind of scheme, in addition to there probably not being a real there, what you see is an emphasis on recruiting others to join the selling operations, as opposed to selling a genuine product or service. There might be some sort of description of a multi-level marketing structure where the returns coming back to the money coming back to the company really is generated by people paying the fees to become a salesperson, as opposed to any genuine product or service. Just like with Ponzi schemes, these frequently have promises of easy money, some kind of passive income where you really don't have to do that much in order to get the returns. But there's no real demonstrated revenue from retail sales. These are the hallmarks of a pyramid scheme, which, like Ponzi schemes and like market manipulations or pump and dump schemes, are really actually fairly common. Finally, I do want to talk a little bit about investment newsletters, because investment newsletters might contain some kind of what seems to be useful information, but might not actually be a legitimate newsletter. So the pump and dump scheme that I mentioned that I prosecuted involved an investment newsletter exactly of this type. It came to people's email box. It seemed to be a general analysis of the market, but really it was a paid for publication where the person distributing the publication was taking payments from owners of small pump and dump type companies. And then he was using his newsletter to participate in the pump part of the scheme, to publicize the company, to distribute its phony press releases, and he did not disclose that he was receiving that compensation from the company. So the readers of his newsletter had no idea that this wasn't really a genuine market analysis. This was really more of an advertising piece. So be very suspicious about these investment newsletters. And the investment newsletters advertise themselves and their services all across the internet. So you may be on a perfectly legitimate website that is itself not fraudulent, and there might be a banner ad or some sort of click ad on that website that links you to a less scrupulous product in one of these phony investment newsletters. So be very cautious of these. And then finally, the last one of the last schemes in this kind of area is an advance fee fraud, which might not necessarily be a securities fraud, but is actually a fairly common type of scheme that's worth talking about. If you've ever been told that you won some kind of lottery or contest, but you had to pay a fee in advance in order to get your winnings, that's more than likely an advance fee fraud. A fraud or scheme where the scammer asks for a payment up front before the deal can be completed. And these are frauds. They may try to fool their victims or their targets with official sounding websites or emails, but no legitimate lottery or contest asks you to pay a fee in advance. So beware of these kinds of schemes. Unfortunately, very often, what we see in these is there's some overseas component, and some of the money goes overseas. As I mentioned before, the SEC does have the ability to get repatriation orders and get money back from other countries when it's gone overseas, but that depends a great deal on which country it has gone to and what our treaties and other agreements are with that country. So the best case scenario is not to participate in these at all and put yourself at risk of losing those funds. A tactic that we see fraudsters use very frequently, or at least somewhat frequently, not as frequently as some of the other schemes that I've described, is using some kind of source credibility, like I mentioned before, and sometimes that might include going so far as to impersonate a member of the government or some government agency. So I, for example, have seen schemes where people use some seal that purports to look like the official SEC seal, or even have copied the official SEC seal, unfortunately, or sometimes use something not quite as blatant, where maybe they'll use the word federal or the abbreviation US in their title. Just know that the SEC and no government agency endorses any particular investment offer. We don't assist in the purchase or sale of securities. We don't participate in money transfers. We don't make unsolicited communications to people seeking detailed personal or financial information. The government's not going to call you and ask for detailed personal or financial information unless the conduct has already been established between you and the government agency. So if you get an email or a phone call from somebody claiming to be the SEC and asking for this information, hang up the phone and then call the SEC directly and ask if anybody's tried to contact you. And as I say, we do not endorse any particular investment product. We don't give business or legal advice. So if somebody's telling you the SEC has endorsed this product, the SEC recommends that people in your position buy this product, that's simply not true. And then last, another kind of fraud that I want to talk about is the binary option scheme. You may be familiar with options contracts, which is the right to buy an underlying asset at a fixed price. Unlike options contracts, binary option contracts promise a payout dependent on the outcome of a yes or no scenario. So a yes or no proposition, and it will pay out depending on whether it says yes or says, the proposition comes true or does not come true. These are typically traded on internet-based platforms, a lot of which may not comply with U.S. securities laws. So there have been a number of complaints of fraud associated with internet-based trading platforms that offer the opportunity to trade binary options. I would just proceed very carefully and proceed with caution in this area. As I say, a lot of the conduct does involve websites that may be run by overseas operators. Very frequently, there will be high-pressure sales tactics, and very frequently they will ask you to input a credit card, and so they'll be using that credit card to make unauthorized charges. If you have interest in this area, I would strongly encourage you to go to investor.gov and put in the search field binary options and do a little research. I would encourage you to go to the National Futures Association's website, which you can see on the slide, www.nfa.futures.org, and again, do some research on binary options and proceed extremely carefully in this area before investing if you choose to invest. Very frequently what we see, again, in terms of tactic that fraudsters use, is that they will target specific members of a group, and they are often members of the group itself, or may pretend to be members of the group that they are targeting. That is a way of building up trust with people, and so it is a tactic that fraudsters use very often. I mentioned before the individual who claimed to have a special expertise and was running a scam right after the recession. One of the things he used was his dad's military service to build up a connection with potential investors. So he talked a lot about how he's from a military family, his dad was in the military, how important military service was to him, despite the fact that he wasn't in the military and was not serving his country. He used that very cynically to reach out to potential investors in the military community. And he was based in San Diego, so there were a lot of people from the military there, and unfortunately was fairly successful, had a number of investors who were part of the Coast Guard, who were part of the Navy, and part of the Marines, because they really responded to that approach. So be very careful. Just because somebody's part of the same community that you're part of, whether it's a professional community or a racial or ethnic community, a faith community, unfortunately, we do see people targeted fairly frequently by people who are members of the same faith community. That's another tactic this particular individual used. He was very active in his faith. He preyed upon people in his church. No matter how well you know that person, you need to check out their background. And also, you should remember that the person who's talking to you may themselves have been scammed. So even if they are somebody that you can trust, that doesn't mean that they themselves haven't been targeted and scammed also. So no matter who you're dealing with, who's recommending an investment to you, you should check out their background. We have on the slide an affinity, this kind of fraud where people target members of their community is known as an affinity fraud. There's a case study here described on the slide in front of you that's really quite similar to what my own experience was. This person actually had been in the military, a former Marine, and he went out, started a hedge fund, and again, targeted his fellow veterans, people currently in the military, other investors, but really used that affinity connection to build up his investor base. And he claimed to be this very successful with annual returns of nearly 200%. 200% is a crazy high return. That should be a huge red flag to you right there if somebody ever approaches you with that. Over the life of the US stock market, from basically its modern lifetime through the 20th and 21st century, major US stocks over time have averaged a return of 8 to 10%. So 200% is huge, and that should be a gigantic red flag. Nonetheless, he managed to raise, as you can see, almost $2 million from investors. He used less than half of that money to actually do anything. Instead, he bought himself a nice Hollywood mansion. He went out and spend a lot on restaurants and fancy clothes, which unfortunately is what fraudsters do. They frequently spend a lot of the money on frivolous things like fancy dinners and trips. And that money's gone. That's very hard to recover because it's been spent in a way that's not recoverable. As I said, the SEC will go in and try to seize assets, like if somebody has a piece of property or a bank account, or they have something tangible, then we will try to seize it and get back to investors. But of course, we can't seize a meal that's already been eaten. So unfortunately, that is what he spent at least some portion of investors' funds on. So again, the message really is just be cautious, even if you think you know the person and they're part of your community. So having said you need to be cautious, and also just keep in mind, really everybody is a target. Unfortunately, whatever group you're part of, somebody's probably targeted you. Certainly senior citizens and retirees are a very frequent target group because they are most likely to have some investment funds saved up for retirement. But we see really all groups being targeted. So knowing that you could very well be targeted by fraud, given the high prevalence in communities, unfortunately, what can you do to protect yourself? First and foremost, anybody that you're dealing with, you want to check them out and find out if they're licensed and registered. So if not, at the very least, you can try to ask them why not. But hopefully, as I said, if they're selling and buying securities on your behalf for compensation, or they're giving you investment advice for compensation, they probably should be registered. You saw at the beginning of the presentation this website that we have, investor.gov, and here you can see it again, except represented on a smartphone. You can check out any investment professional's background on this website through the search tool. And if they're not in there, that is itself a pretty significant data point that you want to consider when you're considering whether you should do business with them. Assuming they are in there, they should have their license and registration, what they're licensed to sell, their employment history, and important disclosures. If, for example, there have been customer complaints against them or they've been sued by the SEC, that kind of information will be disclosed in their record in this database. And these are the things you can check for more specifically. When you go in and you look for an investment professional on investor.gov, if their name pops up and it's in green, then that means they're registered, they're licensed by someone like FINRA, which licenses broker-dealers. Previously registered in gray, they were registered in the past, and then if they do have a disclosure reported, that's going to be in red. If the person's name pops up, I would say always click on Get the Full Report. And this is what the beginning part of it will look like. You will see the person's individual, you will see the company where they work now, whether or not they're a registered investment advisor or broker, and then disclosure reported, as I said, in red. And you can click on this button, Get the Full Report, which will take you to a screen that looks like this. And again, this screen does give you much more detailed information. You can see this particular individual is registered both as an investment advisor and a broker. They have 9 disclosures, which is not a small number of disclosures. Some people have a couple of disclosures. Lots of people have none. 9 is kind of a lot. 22 years of experience in the securities industry. That's a significant amount of experience, but 8 firms, that person's moved a lot. So here's some concerning information that you would probably at least want to know before you made a decision. If you look further towards the bottom of the slide, you can see a little bit of information about the specific disclosures. We've got a customer dispute in there. That might be that the customer thought that the person didn't follow their investing directions. Then we see a regulatory matter towards the bottom of this slide. That might mean that this person has been sued by the SEC. And you can actually, it's not on this slide, but you can actually even click on another button that says Get Detailed Report and get an even more detailed breakdown of this information that will tell you with more specificity what exactly did the customer complain about, what exactly is the regulatory event. It's really formatted in a very easy to read way. So I think it's really actually a quite user-friendly database and has a lot of helpful information. So that's the first thing that you want to do, is research the person that you're dealing with. The next thing you want to do is research the product. What is it that they're selling you? And is that product registered with the SEC? As I said earlier, lots of scams involve unregistered companies. And if somebody is offering you securities, that is where people's money is pooled together and those people are passive, but they give it to an enterprise that they expect to be active on their behalf and generate profits on their behalf, and then those profits will get returned to them, the passive investors. That's probably a security. So it could take the form of an investment contract or something that maybe, if you think of a security just as something like a stock or a bond, wouldn't necessarily occur to you right away as a security. Securities offerings need to be registered with the SEC, and when they are, that information is reflected in our EDGAR database. There are some reasons why an offering might be exempt from registration, or might be part of an exception from registration, but typically speaking, even that information should be in our database because somebody will file something called a Form D that claims that exemption or exception from registration. So if you go into our database, which you can access through investor.gov, or you can access through our website, sec.gov, and put in the name of the company that you're investing in, you will get a lot of information. And this is what our EDGAR database looks like, assuming that this company is in fact registered. So you may have heard of 10Ks and 10Qs, and those documents contain a lot of information about the finances of the company that you're investing in, their general business plan. If that sounds pretty overwhelming to you, as you can see on the screen, right under the field to enter the name of the company that you're searching, there are guides on the SEC's website that can help you learn how to research companies in EDGAR and how to understand the financial information that's contained in that database, because it's really quite useful. So right down below, you can see in the gray field, it says how to research public companies. So if you go to this part of the site and you click on that, that'll give you a lot of information about how to quickly research a company's operations and financial information with some of the tools on EDGAR. Other steps you might take to protect yourself, as I said, if anybody calls claiming to be from the SEC, be sure to call us and don't just take their word for it. Don't pay for investments with credit cards or gift cards or send wires overseas. And again, don't speak to unknown salespeople. It's much better if you are the person initiating the contact, and don't pay for upfront fees in order to claim any kind of proceeds, stocks, or winnings. That's not how legitimate investments work. Secure your online accounts. You've probably heard this in connection with all sorts of things. So if you have an investing account, make sure you, just like with any other password protected online account, you use a strong password, and whenever possible, use a two-step verification process. So, how to protect yourself against fraud. Be aware of some of these common persuasion tactics and red flags. Be alert to some of the common investment scams that we talked about, Ponzi schemes, multi-level marketing schemes, microcap fraud, and make sure you're researching both the financial professional and the investment product before you make any investing decisions. Here are some of the resources you can use to empower yourself. As I said, investor.gov, there's just a wealth of information on this site. It's really pretty easy to navigate around. There's a general search bar up at the top if you just want to put in your term and search, but then all kinds of drop-down menus, and then most importantly, this search tool you can use to research the background of the investment professional you're working with. One of the many things that you could get on this website, we have a checklist of the red flags of investment fraud. Might be a good checklist to print out and have with you if you're trying to make an investing decision about a product that somebody's pitched to you. We have all kinds of investor alerts on here. So if you want to learn about, say, initial coin offerings or altcoin type investments, we have a lot of investor alerts and other investor resources about this type of investment, which can be a security regulated by the SEC, and just a lot of really helpful information. Last slide, here's our basic contact information. The 1-800 number you see on the screen is the general SEC 800 number you can call for assistance. Again, we cannot give specific business or legal advice, but we can direct you towards resources. We can provide guidance with things like maybe transactional questions in terms of how do I contact my broker, or how do I make sure I get copies of a statement from my broker. We can help you with those sorts of things. We have a general email address, help@sec.gov. And then if you want to reach out to the Los Angeles office in particular, that email is Los Angeles, all one word, @sec.gov. We tweet. You can see our Twitter handle down here, @Los Angeles. SEC. In fact, we tweeted about this program in advance of it, and we'll probably be tweeting about it after it. So come and see us on our Twitter channel. And that's it. So let me know if any questions that I can answer or any places I can direct you to in terms of resources. Thanks very much, Christina, and the Los Angeles Public Library. Let's see. Okay, I have a question about is a life insurance policy considered an investment? So life insurance per se is not regulated by the Securities and Exchange Commission. The Securities and Exchange Commission regulates securities, which involve, as I say, these people pooling their money together and then being passive while some profit-generating enterprise is generating returns for them. Insurance is regulated by the state. So something like a straight life insurance policy is going to be regulated by the state of California. What we do see, though, are annuities, which are kind of a hybrid sort of a product. If you are investing in an annuity that is a fixed annuity, giving a fixed return, that is an insurance product because the thing underlying the investment is insurance. Insurance contracts usually, very frequently, life insurance. But if you are invested in something called a variable annuity where the rate of return is not fixed and can go up and down, that very well might be a security and might be regulated by the SEC. So if these are products that you are invested in or you are interested in, I would encourage you to go to investor.gov, put in the term annuity, put in the term variable annuity, and learn more. But insurance itself, straight life insurance, that's a product that's regulated by the state. I will say we do sometimes get complaints from people involving insurance investments. If we get those and we look at them and we think there's something maybe a little off here, but it's not something the SEC covers, we will share that information with the state so that we can make sure somebody is looking at it. So if you're not sure, if you've got a tip you want to send to us and you're not 100% sure whether it's a security, don't worry. We will make sure the tip gets to the right place. And having said that, let me go back to this slide right before, if I may, where we're looking at the website, investor.gov. Usually there's a slide. I don't create the slides. Usually there's a slide in this presentation that discusses it. But on the if you scroll down a little bit on the right-hand side of the landing page of investor.gov, there is a place that says, do you have a complaint or a tip or an inquiry that you can click on, and there's a portal where you can submit your complaints online. We call them TCRs, which is short for tips, complaints, and referrals. But basically, there's a way to submit your question or your concern online. It immediately gets sent to DC. Somebody immediately starts looking at it and begins triaging it. And as I say, if it doesn't fall within our jurisdiction, we will try to get it to where it needs to go. Unfortunately, our investigations are non-public, so you should get an acknowledgement that we've received the information. We can't tell you if we open an investigation based on the information that we receive from you, but I can tell you that all of those tips get looked at very closely. What do I think of the credibility of the research of investment houses like Merrill Lynch or Vanguard on particular investments? That is not something I'm allowed to express an opinion on. And, frankly, I'm a lawyer. I'm not a securities professional, so you probably wouldn't want my opinion. But any entity that you're dealing with, whether it's large or small, you're going to want to do some research on that entity. You can, and the individual in particular that you're dealing with. You can do general kind of Google research, and there's no reason not to do that. But you should also use these tools on investor.gov. So if you are working with a particular person at a large company, I would still put that person's name in this database and look them up because, the particular individual that you're dealing with is so very often the key part of it. And of course, you can put the name of the company in too, whether it's big or small. So if I were a broker and I were working at Joe's brokerage house, My name would be in this database, and Joe's brokerage house would be in this database too. You can search both the individual and the entity. And I would want to do that and get the background on both before I relied on any kind of investment advice that I was getting, or any, made a decision to purchase any particular product from an individual. Let's see if we have any other. I think those are all the comments that I have. Christina, do you have any other comments?
Yeah, I think that was an earlier question. I'm not sure if you can answer it, but it said, since there is a lot of fraud out there, where would be the best places to invest?
What would be the best reasons to invest?
Or where would be the best places?
Okay. So again, I can't give you any particular investing advice in terms of where would be the best place to invest. I can tell you, as I've said in the presentation, fraud very frequently involves individuals who are not registered and investment products that are not registered. So I personally would be very cautious about making any investment through or with or in something that is not registered. As to any particular product or person to deal with, again, I can't give that advice, but I can say this: over the life of the US stock market, it has generally returned 8 to 10% over the long haul for people. There are definitely down years, and there might be several down years in a row, but there are definitely up years. And if you are in for the long haul, generally speaking, that has provided a real benefit to American citizens, and our markets are really the envy of the world because they are well regulated, and they've provided a lot of opportunity for the American people. Why invest instead of just save? Because saving is probably not going to keep up with inflation and meet your long-term goals. It might be great for a short-term goal like buying a car, but for a long-term, more expensive goal like paying for college, paying for retirement, buying a house, most people will find that investing wisely really is something that can benefit them. And these presentations, I tell the horror stories and I show the bad stuff to try to help you protect yourself. But of course, the vast majority of people participating in the market are not fraudsters. So do your homework, do the research that you need to do, but know that you can make wise investing decisions for yourself that will benefit you and your family.
There's actually a new question that just came in.
Okay.
Is the SEC involved with cryptocurrency in any way?
Yes. The short answer is yes. So if you're interested in cryptocurrency, just go to investor.gov and put in the term cryptocurrency, and up will pop a bunch of stuff about cryptocurrency. Depending on the nature of the cryptocurrency, it probably is a security. So if you are talking about a cryptocurrency that really acts like a gift card, like a token, buy so much of this cryptocurrency and you can use it like money at these merchants, and a dollar of cryptocurrency will work like a regular US dollar and nothing else. That may not be a security, but most cryptocurrencies also involve some kind of potential profit or return to the person who's investing in the cryptocurrency. And so very frequently you will see invest in XYZ cryptocurrency company. We will go out and buy a bunch of mining machines. We'll do the mining of the cryptocurrency, and that will generate profits. And then we will return a portion of those profits to you, the investor. Well, that starts to sound a lot like what I described as a security, where people are pooling the money and they're sitting back. I'm not buying the mining machine. I'm not doing the mining. I'm waiting for the mining machines to generate those profits for me and get returned to me. And my money's all pooled with a bunch of other people who are going in together to buy these mining machines. That starts to sound a lot like a security. So the SEC has actually issued some statements on this. We've actually brought some enforcement actions in this area. Anytime there's something new, you're going to attract a lot of innovators and excitement, and maybe there's the potential for returns as that market gets developed and the new products expand quickly. But new things also attract a lot of fraudsters because they know people are excited about this something new. And so unfortunately, we do see a fair number of schemes in this area because people are really preying on that enthusiasm for something new. If you're interested in that, I would advise you to proceed very carefully. Definitely do the research that I've talked about, both just generally on cryptocurrency and researching the background of the people that you're dealing with. Anything else, Tristan?
I think that's all the questions. So I think the key answer is always investor.gov.
Yes, it is. I feel like I say that a lot. Investor.gov. But please don't hesitate to email us or call us. And, you know, even in coronavirus, we may be working remotely, but we are working, and we will, somebody will get back to you.
Okay. All right. I think, okay. Well, I think that's all like the questions for Carol this evening. So thank you so much for all the useful information. And it was a much more, you know, you hear investor protection and you're like, oh, it's boring, but actually it was very fun, I thought. So people found something useful out of it as well.
Okay.
So thank you again. And thank you guys for spending your part of your evening with us. And I guess that's it. So yeah, just look forward to the rest to our daily financial workshops all day this week, till Friday, and then of course those one-on-ones with a certified financial planner on Saturday. So all right, so again, lapl.org/financial planning for more on those programs and to sign up for Saturday. And thank you guys again.
Thank you so much.
Thank you.